Hey everyone, welcome back to the channel. Today, I'm diving into one of the biggest myths in home buying, the 20% down payment. Do you really need to have 20% saved up to buy a home? Let's find out. First off, let's get one thing straight. Putting down 20% can save you money in the long run. You avoid private mortgage insurance or PMI, and your monthly payments are lower. But here's the truth, it's not a requirement. Many lenders allow down payments as low as 3% to 5%. Programs like FHA loans only require 3.5%. And if you're a veteran or active duty military, VA loans might even offer zero down payment. So, what's the catch? Well, smaller down payments mean you'll pay PMI, and your monthly mortgage might be a bit higher. But for many, the trade-off is worth it to get into their dream home sooner rather than later. Saving up 20% can take years. During that time, home prices might go up or interest rates could rise, making homes more expensive. Sometimes buying sooner with a smaller down payment can actually save you money. Now, let's talk strategy. If you go with a lower down payment, make sure you have a solid emergency fund and keep your credit score high. It'll help you get the best interest rates. In the end, it's all about what works best for you, whether it's 3%, 5%, or 20%. The goal is getting into a home that fits your budget and lifestyle. So don't let the 20% myth hold you back. Do your research, explore your options, and take that exciting step toward home ownership. Thanks for watching. If you found this helpful, hit that like button and subscribe for more tips. See you next time.